Oh, let's go live now to Chris Weston. He is Head of Research at Pepperstone. We're keeping a very close eye on the markets. They seem to be pretty wild at the moment, but stocks overnight, well, it was a pretty boring night on Wall Street after we saw those gains on Monday, really, wasn't it, Chris?
Yeah, I think we're at that time of year, Laura, where a lot of the big managers have taken a bit of time off in the European and US summer holidays. So, a bit of liquidity coming out of the market. Volumes were about as low as I've seen for quite some time. But, again, we go back to our old friend, the trade tensions, and, Donald Trump coming out saying he's not ready to do a deal with China. We're so used to him saying, "Oh, good conversation." Then, we're not ready to do a trade deal with China. I don't think anyone's really expecting anything until post the election. We talked about that last week. And then we also saw Secretary of State Mike Pompeo saying there was more companies on their list other than just Huawei, and people just said, well, there's not a lot of reasons to buy. There's not much liquidity in the market. There's a few sellers, and then we see those kind of classic order book dynamics where markets just fall under their own weight. And I think that's kind of where we were. The S&P closed down about 0.8%, and obviously it has led us to a quite negative start for here in Australia today.
You mentioned the global stimulus has helped, but this weekend we have the Jackson Hole Central Bank Symposium. Why do you think that's important?
Well, what we've seen over the last week, maybe 2 weeks, is a load of different central banks, be it the RBA, the RBA yesterday in their minutes, various Fed officials, the ECB, giving us this idea that people are feeling quite vulnerable at the moment, the idea that central bank policy is not going to work. And, the title of the Jackson Hole Symposium is Challenges to Monetary Policy. So I think it's pretty fitting that it comes at a time when the market participants are saying, on balance, these guys can cut rates. They can go to negative interest rates. They can even go to potentially stimulus such as quantitative easing or asset purchases. But we don't think on balance, if we were to see a bigger downturn, that it's going to save our bacon this time around. Now, I think what we're going to see in the Jackson Hole Symposium is Jerome Powell, the Fed governor. We've got our own Governor Lowe speaking there as well, and we'll have to see who else speaks from the Bank of Japan. But the symposium is going to ram it home that they do have the armoury to save us in the term of a downturn. I think that's really the message that the market wants to hear. What is, how convincing can these guys be that if we do see an economic downturn, that the stimulus from monetary policy will save us next time around?
Yeah, Jackson Hole, the altitude must be something in the air for the reserve.
The Jackson Hole Symposium sounds like some kind of wonderful orchestra.
It sounds like an awesome retreat, doesn't it? Just finally, the RBA minutes showed this week that the RBA is looking at unconventional, quote-unquote, ways of stimulating the economy that are being done overseas. What does that mean for us, and what is Philip Lowe actually talking about there?
Well, it's going back to that point that I just made, which is that all the central banks are trying to say to themselves, well, if we see an economic downturn, a really big one, a more protracted one in Australia, then we are studying asset purchases that have taken place in other geographies, such as Europe, for example. And what are the negative consequences? What are the positive consequences of that situation? And we can learn from that. And if needed, we will actually deploy that same situation here in Australia as well. Now, quantitative easing, the idea of expanding expanding base money and buying bonds and effectively flooding the world with liquidity is something that may happen in Australia. But I think the world, and Australia specifically, will have to be a much darker place before that is enacted. So I think they're just trying to convince us that if the worst comes, they do have the policies at their disposal, and they are prepared to use it, which of course is a good thing. But what we want to make sure is there's been actually a lot of negative consequences that have happened from quantitative easing in the likes of Europe and deep negative deposit rates, and we want to learn from that. And I think that's exactly what they were trying to tell us yesterday.